sovereign wealth funds have quietly reshaped global politics more than any treaty in the last decade. And the most shocking lesson sits at number 1, a truth most analysts overlook. Stay tuned until the end to uncover it. Diversification is the cornerstone that keeps sovereign wealth funds afloat during turbulent times. By spreading assets across equities, real estate, infrastructure, and alternative investments, these funds buffer national budgets against commodity price crashes or political shocks. Early pioneers like Norway's government pension fund Global demonstrated that a balanced portfolio can grow even when oil revenues dip, preserving future generations' wealth. Analysts estimate that diversified SWFs outperform single commodity funds by a significant margin over multi-decade horizons. This lesson teaches governments that a well-mixed basket not only stabilizes finances, but also builds credibility with international partners. Up next, we'll explore how transparency can transform public perception at rank 9.
Transparency builds legitimacy in the eyes of both citizens and foreign investors. When funds openly publish annual reports, disclose holdings, and adhere to the Santiago Principles, they foster trust and reduce accusations of hidden political motives. For instance, the Abu Dhabi Investment Authority began releasing more detailed data in the 2000s, which helped calm concerns over its opaque operations. Studies suggest that transparent SWFs enjoy lower borrowing costs for their home countries and attract co-investment opportunities. However, achieving full openness can clash with national security considerations, forcing a delicate balance. This tension underscores the importance of clear governance frameworks, which we'll dissect at rank 8.
Political cycles shape investment horizons, often dictating the timing of major allocations. Election years can trigger a rush to secure visible projects that showcase short-term gains, while stable administrations tend to pursue longer-term, high-return ventures. Researchers have noted that during election periods, some SWFs temporarily tilt toward domestic infrastructure to curry favor, only to revert to global diversification once the political climate settles. This pattern reveals how governance structures can subtly steer capital flows, influencing everything from housing markets to renewable energy pipelines. Understanding this rhythm helps observers predict where funds may pivot next, a clue we'll unpack in the next lesson on strategic asset allocation at rank 7.
Strategic asset allocation influences geopolitical leverage in ways few outsiders anticipate. By positioning sizable stakes in critical sectors, such as energy, technology, or transportation, sovereign wealth funds can subtly sway host country policies or secure favorable trade terms. The case of Singapore's GIC investing heavily in fintech startups across emerging markets illustrates how capital can open diplomatic doors while advancing economic interests. Analysts estimate that these targeted investments can amplify a nation's soft power without direct political overtures. Yet, the line between strategic investment and interference remains blurry, prompting debates over ethical boundaries. Next, we'll examine the domestic versus overseas return trade-off that shapes these decisions at rank 6.
Domestic development versus overseas returns trade-off sits at the heart of many sovereign wealth fund debates. Leaders often grapple with the desire to fund homegrown projects that create jobs and infrastructure against the lure of higher yields abroad. Norway's fund famously limits domestic exposure to avoid market distortion, while others, like the Qatar Investment Authority, channel billions into local stadiums and hotels ahead of global events. Economic models suggest that balancing these priorities can stabilize national economies without sacrificing growth potential. However, missteps, such as overinvesting domestically, can inflate asset bubbles, whereas excessive foreign focus may erode public support. The next segment reveals how governance structures determine a fund's resilience at rank 5.
Governance structures determine fund resilience, acting as the backbone that safeguards assets from political meddling and mismanagement. Robust boards, independent auditors, and clear investment mandates create a firewall between state ambitions and financial stewardship. The experience of the Kuwait Investment Authority, which suffered from frequent ministerial interference, contrasts sharply with the disciplined oversight seen in Norway's fund, credited for its consistent performance. Scholars argue that transparent, rule-based governance reduces volatility and enhances long-term returns, while also mitigating corruption risks. Yet, implementing such structures can be challenging in nations with entrenched patronage networks. Up next, we'll see how currency management can tilt exchange markets at rank 4.
Currency management can sway exchange markets, especially when sovereign wealth funds execute large-scale trades. By strategically buying or selling foreign assets, these funds influence demand for particular currencies, sometimes stabilizing or destabilizing exchange rates. For example, the Saudi Arabian Public Investment Fund's recent diversification into U.S. equities contributed to subtle shifts in the real-dollar dynamics. Economists caution that while such moves can protect national wealth from currency risk, they may also trigger unintended ripple effects in global forex markets. Understanding this power underscores why central banks often monitor SWF activities closely. Our next lesson uncovers how these funds become diplomatic tools at rank 3.
Sovereign funds can become diplomatic tools, weaving finance into the fabric of international relations. By extending credit lines, co-investing in strategic projects, or offering favorable financing terms, governments leverage capital to build alliances and secure geopolitical footholds. The United Arab Emirates, through its sovereign investments, has deepened ties across Africa and Europe, fostering both economic and political goodwill. Critics argue this blurs the line between investment and influence, raising questions about sovereignty and dependency. Nevertheless, the practice illustrates how money can serve as a subtle extension of foreign policy, a concept we'll explore further when we discuss market impact power at rank 2.
Massive fund size creates market impact power that few other investors can match. When a sovereign wealth fund deploys billions into a single asset class, it can move prices, set trends, and even dictate valuation benchmarks. The sheer scale of the China Investment Corporation's holdings, for instance, has been known to influence global bond yields and equity valuations. Analysts note that such clout can be wielded responsibly to stabilize markets during crises, yet it also carries the risk of amplifying volatility if misused. This extraordinary influence sets the stage for our final revelation, the ultimate political prize that every fund secretly pursues at rank 1.
Independence is the ultimate prize that sovereign wealth funds chase, aiming to shield national economies from political turbulence while preserving long-term prosperity. When a fund operates free from short-term political pressures, it can pursue disciplined investment strategies that outlive any single administration. This autonomy not only safeguards assets for future generations but also strengthens a country's bargaining position on the world stage, as financial muscle can be wielded without overt political strings. Experts contend that achieving true independence requires a blend of transparent governance, diversified portfolios, and robust legal frameworks, elements we've dissected throughout this countdown. By mastering these lessons, nations can transform their sovereign wealth into a resilient, apolitical engine of growth, reshaping global politics from behind the scenes.
We've journeyed through 10 powerful lessons, from how diversification cushions economies to the ultimate quest for political independence, and each step showed just how deeply sovereign wealth funds intertwine with global power. If you enjoyed this deep dive, hit subscribe so you won't miss the next mind-blowing list we drop each week. Which lesson resonated with you the most? Or did you discover a new insight? Share your thoughts below. I love reading your perspectives. And if this video added value, give it a like. It helps the channel grow and brings more content like this to your feed. Thanks for watching, and see you in the next countdown.